What do you make of this, this idea that half of these companies are going to be out of business by the end of this year? Do you believe that?
Sure, that's probably a bit of a dramatic statement, Betty. Here's what's really going on in the oil and gas industry right now. A lot of the oil and gas producers are trying to turn $70 oil into the new $90 oil. And what I mean by that is they're trying to earn the same rates of return at $70 oil that they used to earn at $90 oil. Well, how do they do that? Well, they do that by reducing their service costs. So a lot of the service costs are being cut between 15 and 30%. So a lot of the companies that are providing fracking services are actually seeing their revenues decline by anywhere between 15 and 30%. So that's creating some concern in this type of an industry as you see revenues decline.
Okay, how are they cutting their services, though?
Well, when you look at the cost structure of the service companies, the fracking companies, a large component of the service costs and the cost structure is really labor. And so what's happening is, unfortunately, they are cutting headcounts, and so they're reducing their variable costs, their labor costs, and that's resulting in lower revenues for those various companies.
Okay, so it is happening. You just don't think it's happening to the scale of what some of these people are saying, from 40 to 20. So you think by the end of this year we might see how many go out of business?
There's no doubt that we will probably see some consolidation, and there may be a few small ones go out of business. But this business is really, really necessary in the overall production of an oil and gas well. And the oil and gas producers really drive the car here. They will dictate the number of fracking companies and service companies in the industry.
Right, because when oil goes back up, Rob, they need these companies, right? You can't just have like one left standing there.
No, you're exactly right, Betty. It's really in the best interest of the oil and gas producers to make sure that they have multiple service providers. They don't want to reduce the number of service providers. They want to have as many as they can, because obviously it's good business practice. As you mentioned, when prices go up, they want to be able to keep pricing pressure to a minimum when commodity prices return and you see higher oil prices and higher natural gas prices.
Okay, so I'm trying to get to the why we care, right? So, Rob, okay, how do you play this? How do you play this?
Yeah, the oilfield services sector is really quite diverse. It encompasses several different businesses. It includes offshore drilling, onshore drilling, equipment manufacturers. We think the best way to play the oilfield services business is to focus on the onshore companies that are providing the fracking services. And the reason for that is because they are best positioned to benefit when this frack log that you mentioned earlier starts to diminish.
And who are they? Who are these companies?
So we like companies like Baker Hughes, Schlumberger, Halliburton. These are large integrated oilfield services companies that are very well positioned in some of the top U.S. basins and like I mentioned, will benefit when the frack log begins to fall.